Now, so I'm looking at question number 2, part B, AAA, April 2022. So required, they want us to analyze the above scenario and explain the course of action that you would take for 8 marks. You are a newly appointed internal auditor of Zito Limited, a company that is currently experiencing financial difficulties. As a condition for obtaining bank loans, the company management has agreed to maintain certain liquidity ratios, asset to liquidity ratios, and gross profit margins. Listen, I'm repeating again, that as a condition for obtaining bank loans, the company management has agreed to maintain certain liquidity ratios. And those ratios are asset to liquidity ratios and the gross profit margin. They have to be maintained up there. So paragraph number 2, the draft financial statements for the current period appear to show that the company has not succeeded in complying with some of the set targets. The profit figures are significantly affected by the calculation of bad debts and the depreciation charges. There has been a suggestion to the effect that these could be changed in order to meet the bank's lending conditions. You are informed that there is a real danger that if the bank withdraws its funding, the company would become insolvent and thus will have to cease trading. The chief accountant has asked you to sign certain internal records that have been altered in order to show the bank that the set targets have been met. So in short, you're being asked, ladies and gentlemen, to engage in creative accounting. You are being told here to engage in what? In creative accounting. So ladies and gentlemen, in your own understanding, if you're told here to analyze the above scenario and then explain the courses of action that you would take, how do I get to explain this kind of a scenario? I'll be able to write tons and tons of pages regarding this. Even these 8 marks are quite few for such a question. So ladies and gentlemen, listen to me. We are saying that this particular question here borders on what here? On creative accounting. Creative accounting. So remember that creative accounting involves what entails what? This is where, for example, we want to manufacture some fake profits, right? Perhaps our farm like this one is really struggling, but here would want the stakeholders to see that we are doing very well. We are doing very well. So we manufacture fictitious profits. Like in this case here, these guys would want to manufacture fictitious profits, fictitious liquidity levels, which are not there, so that at the end of the day, they will be able to get what here? Some bank loans. Now, ladies and gentlemen, listen and listen to me very well. So creative accounting, of course, in this case here, it is unethical. It is unethical. It is illegal. It is illegal. Accountants who engage in creative accounting, in most cases, find themselves, ladies and gentlemen, in prison, depending on the magnitude, depending on the materiality, right? Why is it illegal? Ladies and gentlemen, listen here. When you falsify records, remember financial statements are being relied upon by many stakeholders, leave alone this one here where we have been told that it's only for purpose of borrowing. No. You'll do those things, append your signature there, and then there will be other stakeholders now will be coming to rely on these financial statements that have been prepared and signed by yourselves to make like investment decisions. So later on, people could sue you individually and of course severally with the companies and other people who, in this case here, are part of the collusion. So we are saying here that the creative accounting from the word go with How I will start this question, I'll have to say that really to engage in this, creating fake things, falsifying accounts is what here is unethical, Now listen. So is there somebody, first of all, who can remind us those standards that surround ethics in business? So we call them the ethical standards. They are normally 5. Ethical standards. They are normally 5. They are normally 5. Is there somebody who can remind us these ethical standards? They are normally 5. Which standards are we talking about here? Somebody. This is supposed to be a very discursive class. It's not my class. Integrity. Thank you so much. Integrity. That's number 1. Number 2, confidentiality. Confidentiality, great. Number 3, we have objectivity. Number 4, we have in this case here professional behavior. And then lastly, number 5, we have a professional what here? Competence and the due care. Professional competence and the due care. The moment I have this, I'll have gotten more than half of the marks. Because like now under integrity, I'll tell these people that my professional body, where I belong, which is ISPAC, needs me to be out here to exercise a lot of integrity, to be open, to be straightforward, to be honest in all my dealings. I would want to be honest. In all my dealings, right? And for me to be honest in this particular dealing, ladies and gentlemen, there is no way I will want to engage in any falsification of what here documents, because that will go against the integrity the integrity standard. I'll not talk about this. I'll go and talk about 3, objectivity. So remember, at times your employers will tell you, ladies and gentlemen, to engage in some irregularities because they do not know. They don't know. I've seen, there are times I've been given by people, you go to somebody, someone tells you, know what, I owe KRA millions and millions. But when we sit down, ladies and gentlemen, to look at this thing now technically, when we are very objective, very objective like this, we realize, hey, this guy does not have that much of a liability to KRA. So in this particular situation, I would want to be as objective as possible. I would want to be very independent. And if I'm independent, I'll be looking at the true status of this particular account. The true status. Right? So I would want really here to be very independent for me to be able to produce the true picture. At times, some of these managers who are telling you, hey, falsify these, no. Tell them, if it is this liquidity, let me compute them myself. I don't want any pressure from you. This is quite a good point, action point. Right? Remember, when we talk over objectivity, ladies and gentlemen, if I was to give you some background about objectivity, please don't forget, when we talk over objectivity, normally talk over surface, those threats. Surface. So remember, under surface, what do we have? We have a self-interest. I'll talk about this. This is self-interest. This is advocacy. This is familiarity. This is intimidation, and then this is what here, self-review. I don't have to speak about all of them really, because the marks given are not 20, it's only 8 marks. So I'll choose the ones that are very relevant. So like now here, self-interest is quite a relevant point, which could easily injure my independence, impair my independence. Why is self-interest a big threat to my independence here? It's because I am an employee of this company. I am an employee of this company. I know if this bank doesn't give this company, they have also told me this, if this bank doesn't give this company the loan, we are told that the company will cease trading. The company will cease trading. Let me read this question because I can see now the numbers have increased a little bit. I'm so sure I may be losing a few of us, even the ones who came in earlier. It's always good for you to keep on reading this question severally, for you to answer, for even to know the exam technique. We are told here you are a newly appointed internal auditor. You see, you are appointed internal auditor of Zito Limited, a company that is currently experiencing financial difficulties. As a condition for obtaining bank loan, the company management has agreed to maintain certain liquidity ratios, asset to liquidity ratios, and the gross profit margins. The draft financial statements for the current period appear to show that the company has not succeeded in complying with some of the set targets. The profit figures are significantly affected by the calculation of bad debts and depreciation OTR charges. So, ladies and gentlemen, under product objectivity, under objectivity, I would really want to recompute, recalculate these bad debts and to see really where is the problem, ladies and gentlemen, here. Sorry, I can see charts here, sorry. Okay, great, they're all charts. Great. Please, whenever you don't understand anything, remember culture, don't lay back, no. Come to the charts and mention, raise even your hand. If you see I'm not saying charts, raise your hand. I'll be able to see you and we shall be able to really discuss the issue. And even when you have good points, trust you me, this is something that really I can't take like I know it 100%. No, it's about learning. I want to learn from you guys, big time. So if you've got good points, please do not hesitate throwing them there, right? My internet connection is unstable. I've never seen this of late. Just a minute, okay. I can see it has disappeared. No worries. So we are told here, the draft financial statements for the current period appear to show that the company has not succeeded in complying with some of the set targets. The profit figures are significantly affected by the calculation of bad debts and depreciation charges. There has been a suggestion to the effect that this could be changed in order to meet the bank's lending conditions. So, ladies and gentlemen, I was trying to explain something here. Objectivity means that I need to look at really these external pressures. First of all, say, hey, no, give me time to recalculate these things, to see really whether what you guys are telling me is the exact thing that is happening on the ground. As I started this question, I told you that, ladies and gentlemen, it's possible that some of these clients here would be crying for no good reason, right? Perhaps in this case, even their ratios are okay and they don't know. So as an internal auditor, I would want, even if the accountant had done them, I would want, as an auditing procedure, I would want to recalculate this and assess the impact really, and even advise them. Look at this. They want me to analyze the above scenario and explain the cause of action that you do what here. So these are the action points. I have to recalculate this, right? So we are told here that you are informed that there is a real danger. Great. Let me just continue here. Now listen and listen to me very well. So under objectivity, we are saying here that I know I am an internal auditor who has been appointed. I know that there is an income that I'll be getting out of this particular engagement that I'll be doing. As I do the internal audit every month, I'm billing these guys, they're giving me something, right? So I would really want to protect my income. So I have this self-interest. But now look at the bigger picture. Remember, you are a certified public accountant. You are representing a bigger interest, even beyond these organizations. So should you, in this case here, protect your own income, your own interest, what will happen at the end of the day when you will receive this money from the bank? And because the bank relied on your financial statements, which in this case you signed somewhere there, which in this case you falsified, right? So at the end of the day, you can even be sued. And remember, there are also other stakeholders who will go under the moment, of course, things go wrong. So as much as there is a self-interest, as much as there is every reason for me to be the advocate of the company, to try to protect this company from going under, I've got a bigger calling. My bigger calling is to stick with the truth. Here, that's why we are called a certified public accountant. As much as there is quite a lot of intimidation, when I try to look at these things, ladies and gentlemen, here, I'm seeing a situation where this company will collapse. If I simply refuse to append my signature, I can see this company is going to collapse. But truth be told, I would rather have it collapsing today than we keep on, in this case here, piling mountains and mountains of loans from banks, knowing for sure that it may be 2 years from today, it may be 5 years from today, that this particular company at the end of the day will do what here will collapse. We would rather stand with what here, the truth here. Stand with the truth. Professional behavior, ladies and gentlemen, should I, in this case here, engage? Should I be in this collusion thing of stealing a loan from this particular bank? At the end of the day, I'll be branded a thief. And once I'm branded a thief, then ISPAC does not want to be associated with thieves. ISPAC would want members of ISPAC, ladies and gentlemen, or accountants in this country to behave in a way that even enhances the credibility of the institute. So I'm saying, I'm trying to defend my case that I would want, ladies and gentlemen, in this case here to refuse these simply because I would want to be within the dictates of the profession. One of them being what here, that we are required here to behave what here professionally. Look at this, professional due care. Professional due care. If, ladies and gentlemen, I go this way, I engage in these unethical practices, automatically I will not be caring of the other stakeholders, right? There I will lose. There I will lose. Now listen and listen to me very well. Come here, confidentiality. So assuming, ladies and gentlemen, that I do not agree with this particular management, I've said I'm not going to sign. I'm not going to sign this thing. Do you think it will be proper for me, for example, to go and tell the bank, you know what, you will be swindled? Assuming this was an internal audit of RCM, we are telling this guy would want to borrow from Barclays Bank of Kenya. And this is, so when we push this guy, in this case, to the corner, do you think it will be proper for him to go to the management or whoever at Barclays Bank of Kenya and ask, no, that is against accounting principles. Accounting principles, ethical standards, ladies and gentlemen, would always require of us to ensure that whatever information that we come across during our audit, during our accountancy, within our clients here, we must ensure that that information does not fall on the ears of what here third parties without the consent of this company. So this really doesn't seem to be a very big case. It's basically, it's going to be a disagreement between a company and one party called the bank. So it has not reached that material level, which is of what here public interest. If, for example, you have to come to RCM today, Felix, and then you realize, for example, Mwalimu here, on top of course, earning money through offering tuition, you realize that Mwalimu here is planning to engage in some terrorism activity. You know, terrorism, now this is something that is spelling death. Even to, for example, can spell death, yes, to the entire country. So this is something that is so big. Its magnitude is so big, right? Death, etc., etc. Then that one now is bordering on big criminal activities. So those ones here you can run to a police station. But for this one, ladies and gentlemen, depending on materiality, on materiality, really, this is something that you would need to simply excuse yourself from the engagement. You excuse yourself from the engagement and say, hey, I don't want to continue with this engagement. I don't want to continue with this engagement. So if you don't mind, ladies and gentlemen, let's read the answer given by KASNEB so that you can save on time. Great. Great. So here we are. Answer given by KASNEB. Just a moment. I'll get it very fast. You also have those answers, ladies and gentlemen. You also have them. Great. The paper looks quite old, but doesn't really matter. So if we go to question number, it was question number 2. Number 2. Yep. So these are questions that you guys should have scooped all the marks. Request to alter accounts, creative accounting. Let me increase the font size. Request in this case here to do what here? To alter. Great. So request to alter accounts. The ISPAC Professional Body Code of Conduct, a code of professional conduct, requires that members should behave with integrity in all professional relationships, and that integrity implies honesty, fair dealing, and truthfulness. It is therefore unethical for professional accountants to falsify financial records. To do so might also constitute a criminal offense, and if the public interest or national security is involved, there may even be a responsibility to report the matter to third parties, although there is no indication in the question that this is the case. In practices, however, the dividing line between what is acceptable and what is often a difficult one, and what is often a difficult one to draw. The internal auditor should first conduct a thorough review of the internal records to establish whether or not the company has in fact complied with the bank's requirements. So yes, ladies and gentlemen, you must be objective here. Do the calculations yourself. If the company has not done so, the question arises as to whether any legitimate changes, legitimate legal changes can be made in order to meet the requirements, right? Is there a way you can work around the financial reporting standards to ensure that legally within the law, you can make any changes according to your professional competence, right? The question indicates that the profit figures are significantly affected by the calculation of the bad debt and depreciation. What year? Depreciation figures. It is not uncommon for changes to such calculations to be made, although the justification for such changes must be in order to present the financial position more fairly and not simply to achieve targets. Changes in these calculations do not generally amount to changes in accounting policy, and therefore do not require separate disclosure in financial statements as required by the accounting standards, unless perhaps the amounts are material, in which case they might constitute exceptional items. Only if a change in calculations is justified by reference to a reassessment of asset lines, perhaps, or because the bad debt provision has been calculated over prudently in the past, will it be acceptable to make the changes? Ladies and gentlemen, all that is really something I'll not remember even myself. The most important thing is that if I will be able to make changes legally, then I'll go ahead and make those changes. It is important that the documentation that goes to the bank directly clearly discloses the changes as they are likely to be material to the bank. So if there are changes which you have made, so to be able to defend myself as an internal auditor, I would ensure that those changes are highlighted to the bank. The situation that might arise where the changes are made and the internal auditor agrees, subject to proper disclosure being made or signs relevant documentation, but at a later stage discovers that the bank has not been properly informed about the changes. Great. I read very fast. That we are being warned here that the changes we are making, there is a very high possibility that the bank may not be informed. The disclosures here may even be hidden, right? From the bank knowing. In these circumstances, there is no duty to report the matter to the bank, and the auditor would be in breach of what here? In breach of his duty of confidentiality to his employer if he did so. However, I would seriously consider whether to continue in employment with such a company. I would express my concerns in writing at the highest possible level at all stages during their proceedings. So, ladies and gentlemen, please listen and listen to me very well. These are very common questions, especially the ACCA question that I was giving you in the very last minute. We're discussing this thing about what here? Integrity. So the most important thing is simply to raise the case in light of this. This is the opportunity that I have to showcase my competence, right? So what I want to do is to be very objective, to fight off any pressures from outside, so that I'll be able to objectively to do these computations and see. And when I do these computations, I realize that for sure there are changes to be made, which are legal. I'll make them, but again, ensure that there are adequate disclosures, so that the bank can know that there were a few things that were done there, right? So confidentiality, these are matters that should remain within the company, so it will not be proper for me to go ahead and do what you disclose this matter personally to the bank. No. Mine should basically be to do what you have to resign, because I don't want to be branded an accountant thief. Instead of being called a chief accountant, you're called a thief accountant. No, right? And all in all, I must ensure that, ladies and gentlemen, I will be honest, straightforward in my dealings. So I don't know whether, ladies and gentlemen, this is okay, so that we can now go to the next question. Have you gotten a high level understanding? High level understanding? Please, you have to talk to me. If you don't talk to me, what will happen? What will happen if you don't talk to me? You must talk to your father. Yes, you must talk to your father. And if you look at all the questions, the question papers, as we shall see, ladies and gentlemen, past question papers, we rarely miss a question on this integrity. We rarely. Good. So please allow us to go to the next question. The question that I would have done, ladies and gentlemen, immediately after this would have been question number after this. You don't have to follow any order, remember. The question that I would have done here, which was really straightforward, easy marks, is question number 1. Question number 1, I'll blow all the marks even without knowing what I'm doing. So like now here, part B, question 1B, in the context of international regulation of the auditing profession, discuss the role of IFR, the role of the International Forum of Independent Audit Regulators. This falls under emerging issues. And if you allow me, I would want to play some video for you. It's good to play videos this time around. We want to be very practical. This time round, hakuna machezo. This time round, we must be very practical in whatever that we do. There is no choice. It's a 5 minutes video. Great.
Organization.
Side, is that sound okay?
We are the international leading organization on auditing matters, and our mission is to serve the public interest and enhance investor protection by improving audit quality globally. IFIA was established in September 2006 and has grown rapidly after that. Currently, we have members from 51 jurisdictions, actually from all continents, so we're a truly global organization through which members can work together on their shared commitment to improve audit quality. As audits are becoming more complex and more cross-border, and the 6 largest global audit network firms are organized globally, and the ultimate tone at the top comes from their global leadership, it's very important that audit regulators work very closely together in exchanging information on the audit market, in sharing experiences in audit oversight, and in interacting with external stakeholders and forming views and taking positions on audit quality matters to advance their mission. As IFIA, we achieve our mission through 3 main work streams. The first most important work stream is through our regular interactions with the global leadership of the 6 largest global audit network firms. We discuss with them topics like our inspection findings when we do inspections of public interest entity audits. We discuss the outcomes of these inspections with them and also how these compare to their own internal audit quality monitoring results. We discuss root cause analysis with them, what really causes the deficiencies and shortcomings in audit quality, and we discuss the action plans that they are taking and implementing and the effectiveness of those plans. Besides this, as officers of IFIA, so the chair and vice chair of IFIA, we are also engaging with the global CEOs of the big 6 firms to discuss with them their audit quality agenda and the challenges that they're facing in driving consistency and execution of high quality audits throughout their networks, so in each and every member firm, in each and every country, so to say. But also we discuss with them current trends in the audit sector. For instance, the recent developments in technology, data analytical tools are more and more used in audits, and that poses also certain challenges to talent. But also we discuss with them the increasing consulting compared to the audit revenues that are generated and the potential impact that could have on audit quality. Likewise, other governance and structural issues and trends if you look at the big 6 global firms. The second work stream is our interactions with the international standard setting boards, the IAASB and the IESBA, who set auditing standards and ethical and independent standards respectively. We discuss with them how these standards can contribute to improvement of audit quality and how these can better drive consistency in auditor behavior. And thirdly, we have our mainstream, which is having engagement with investors and audit committees. As IFIA, we have established an advisory group of investors and audit committees to discuss with them all kinds of topics relevant to audit quality, because they have a certain role to play in view of quality vis-à-vis the external auditor. And this advisory group brings depth and continuity in our ongoing dialogue with investors and audit committees. And we also work together with other international organizations like IOSCO and the Financial Stability Board, who have a keen interest in audit quality, as audit is very important in view of the functioning and confidence in the capital markets and the financial stability. These work streams, these 3 work streams of IFIA, are supported by IFIA's annual inspection findings survey, which we circulate amongst our members. Our members are requested to report the outcomes of their national inspection programs into the survey, and in March this year we have published the 4th inspection findings survey report on a row. If you look at the report, it shows that there are still persistently high levels of inspection findings in key areas of the audit.
Great. So, ladies and gentlemen, let's read the question. I think that video, it has reached, it has been of help. So, great. So, okay, so here we are. So in the context of international regulations of the auditing profession, discuss the role of the International Forum of Independent Audit Regulators. Now I would want to give some background about this IFIAR. Let me give you some background here about this IFIAR. Now, my good students, listen here. You see, if you look at globally, most of the accounting bodies that we have tend to have an inclination towards who? They tend to have an inclination towards accountancy as a whole. So, for example, when you look at the home locally here, we have ISPAC. So ISPAC in this case here is the Institute of Certified Public Accountants of who? Kenya, accountants. So a body of accountants, in this case, are regulating who? Even auditors. When you look at, in this case here globally, for example, we have ACCA, Association of Chartered Certified Accountants in the UK, regulating accountants, internal auditors, external auditors, imagine, but it's an umbrella of who? Accountants, and accounting is quite general. We have, for example, in this case here, the ICAEW, the Institute of Chartered Accountants of England and Wales, right? Accountants. So you get, for example, if it's an internal auditor, they will tell you, come and register here. If it's an external auditor, come and register there. If it's just a normal accountant, come and register there. So we have these guys called IFIAR. The key thing here is that we are talking about independent auditors, regulators, who really felt that they would want a global body of independent auditors. That's external auditors, independent external auditors. And that's why you're hearing these guys talking about what here, like the big six. They're calling them the big six. Of course, locally here, we talk of big four. But in the global stage, there are 6 of them. the big six, right? Right. So in this case here, they are looking at what here? External audit. And amongst the things that they would want, their major objective, which you should never forget, ladies and gentlemen, this IFAR, number one, is to enhance the auditing quality. Enhance the audit quality. Enhance the audit quality. How do they do this? These people, at the end of every year, they'll get these big organizations that have got big auditors, these big six. So they do some circularization. They circulate questionnaires to them, asking those people, did you have any external audit this year? How would you rate your external auditor in terms of blah, 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 blah. So those guys will be able to do ratings. And at the end of the day, without disclosing who gave which information, IFAR will be able to give those findings to these organizations. But you guys were so good, but perhaps you were very expensive. You guys were so good, but there is this. So at the end of the day, they will be enhancing the audit quality. And of course, the moment they enhance the audit quality, they're as well enhancing what here, the credibility of these organizations. The credibility of these organizations. This is a very important objective of IFAR. IFAR. Ladies and gentlemen, the other thing is that it is only this body that is able to put together these big competing firms, competitors on a round table for discussions of weighty matters affecting the industry in general. So by doing that, we shall be able to have what we call sharing of information. Sharing of information. So this sharing of information again will lead to what we call standardization. Standardization. So for us to be able to pick this IFAR concept very well, allow ourselves, ladies and gentlemen, to go through this answer. To go through this answer. Great. It's here. It's here. It is the role of the International Forum of Independent Audit Regulators. The International Forum of Independent Audit Regulators, IFAR, was established in September 06 by independent audit regulators from 18 jurisdictions. Since its creation, IFAR's membership has grown as a result of the establishment of new independent audit regulators in different jurisdictions around the globe, bringing together independent audit regulators from a total of 52 jurisdictions. And that is why we saw that beautiful lady saying that truly IFAR is a global auditors body. IFAR focuses on the following activities. Number one, sharing knowledge of the audit market environment and the practical experience of independent audit regulatory activity with a focus on inspections of auditors and audit firms. So sharing knowledge, that's key. Promoting collaborations and consistency in regulatory activities. I spoke of standardization. Providing a platform for dialogue with other international organizations that have an interest in audit quality. Improving audit quality. Implementing IFAR's new governance structures and operations. I'll have to explain that better. Second last, strengthening IFAR's role as the international leader on audit matters, facilitating learning and cooperation among IFAR members. Ladies and gentlemen, listen and listen to me very well. When you talk of governance structure, and governance structure, this one, implementation of the IFAR's governance structure, remember audit firms, outside here, we recommend a partnership approach. Partnership, you should be many partners. The more the partners, the better for auditing firms because of what your succession planning. We don't want those situations where one person, a sole trader, running an auditing firm. When he dies, the entire thing collapses, and yet this guy had an obligation to discharge, an obligation to audit many, many firms out there, right? So in this case here, according to EFEAR, ladies and gentlemen, they have in this case here these governance structures, which basically is premised on what we call the partnership. Even if, for example, you want like what we call limited liability, they would want you to form what we call, like if it's Aura and Associates, LLP, limited liability partnership, limited liability partnership. Just give me 1 minute. I change my battery. And also, of course, it's important for us to take some break of 5 minutes. Very important. Okay, so we're explaining this thing that in terms of the governance structure, they would really, this EFER would want auditing firms to be managed professionally so that they also embed what we call succession planning at the core of the operations. That's why you get, for example, KPMG, they're always admitting in new partners, they're told bring in 15 million, come on board. And also we have other senior partners retiring, going to their private practices or to other organizations. So the concept is at management level, people who can sign the reports, the audit opinions here should be many, not one person. So we want us, ladies and gentlemen, here to repeat this and don't get tired repeating this severally. But we want us to look at this answer again of IFEAR. Very important for us. Great. Here we are. So the EFER focuses on the following activities: sharing knowledge of the audit market environment and the practical experience of independent auditory activities that focus on inspections of auditors and audit firms. So if I'm the one talking about this, I'll even break down these to two very important points. Number one, I'll talk of sharing of knowledge. Number two, I'll talk of what here? Inspection of auditors and audit firms. Promoting collaboration and consistency in the regulatory activity, right? Providing a platform for dialogue that you cannot remember, but I'll remember improving audit quality. I will remember the concept of implementing the new governance structures and operations, right? I will remember the concept of facilitating learning and cooperation among the members, but let us not be seeing ourselves as competitors throughout. Let's not be fighting. There are areas of cooperation. There are areas of collaboration that we need to really exploit. So I hope, ladies and gentlemen, that is now something that you guys, if you happen to get it, it can't come direct, but it's good for you to have general information. So can I go to a different question? 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 Remember, it's about high level understanding. They are not talking to me. They are not talking to me. Can I go to question 1A? Can I go to question number 1A? Are they hearing me? Hello? Hello? Are we together? Okay. Thank you. Great. So we go to part A of this question. Part A was quite a tricky one. Very few students were able to ace this through. Many, in this case here, just so. a bird with spectacles in this particular question? They saw nothing, nothing, nothing. Great. Here we are. So always start by reading the requirement. So required with reference to international standards on auditing, ISIL, and any other acceptable standards of global practice, prepare a proposal paper on the required standards of professional practice. A proposal paper on the required standards of professional practice. Ah, great, great. So you're told part A, the regulatory body for professional accountants in your country has approached you to draft professional standards of practice in conduct and reporting on attestation engagements, These are engagements in which a professional accountant reports on the reliability of information, usually of a financial nature, presented by one party to another to assist the latter make inferences on the former. Big English for nothing, really. Big English for nothing, really. Ladies and gentlemen, I would want us, before looking at this particular question, I would want somebody here to differentiate between attestation engagements and direct engagements. What is the difference between those two types of engagements? Attestation engagements and direct engagements. Attestation engagements. Attestation engagements and direct engagements. I'm waiting, but perhaps as I wait, because I know you guys are writing something, Now, ladies and gentlemen, at times in this case here, you'll get your certificates being, or rather you being required to take, in this case, your certificates to the Commissioner of Oaths, so that he can really say that whatever copies you're going to give somewhere else represent what here, a true copy. So they are being attested, they're being confirmed. Those certificates were issued to you by a different body, a different university, or NEC, for example. And then we have a different party here who is attesting to confirm. So basically, under attestation engagements, we have got two stakeholders here. We've got two parties here, right? We have the preparer, and then we have, in this case here, somebody else who will give some assurance, right? For other parties now to come and really rely on the information prepared by this first party. So anytime they talk about attestation, always see that we have got two parties, two major parties here. Like auditing engagements are attestation engagements. Why? Because, ladies and gentlemen, the accountant here will be required to prepare financial statements. But before these financial statements go to the end users, there is a party in between here, a practitioner called an independent auditor who has to look at through those financial statements, ladies and gentlemen. And then at the end of the day, what happens? At the end of the day, He will give an opinion. He will give some level of what? Yeah, assurance. He will give some level of assurance. So it's assuring any third party who will be using this particular financial statements to make whichever decisions that, hey, they portray a true and a fair view of the financial position of the said entity. So that's an attestation. So to attest is like to give assurance over documents that never originated from you. You are simply coming in to give an opinion. An opinion. They have finished like that. And then later on, ladies and gentlemen, you are coming in as an auditor to give some opinion so that some people out there can be assured that whoever who prepared these financial statements did a pretty good job. There's no creative accounting. Quite interesting. Now, of course, for direct engagement, ladies and gentlemen, now this concept of attestation is not there. So for direct engagement, perhaps you're doing like a tax, right, computation, and that thing goes to KRA without being audited. So whenever that kind of, ladies and gentlemen, arrangement happens, so that we have got one individual who does the work, writes even the conclusions, and then, of course, whatever he prepares, nobody else is coming to confirm in between. Whatever he prepares goes to the third parties automatically. Then that becomes what we call a direct engagement. A direct engagement. Now let's read the question again. 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 Let's read this question again. So I'm sharing here. So now they are talking about something very nice here. The regulatory body for professional accountants in your country has approached you to draft professional standards of practice in conduct and reporting on attestation engagements. Wow. These are engagements in which a professional accountant reports on the reliability of information, usually of a financial nature, presented by one party to another to assist the latter make inferences on the former. So required with reference to international standards on auditing, ISAs, and any other acceptable standards of global practice, prepare a proposal paper on the required standards of professional practice. I would want to give you guys 3 minutes to tell me what you wrote in this question. Please don't be shy. Don't be shy. Don't be shy. We agreed that all of us are mature and there is nothing really that we should fear about each other. Nothing. Nothing. What did you jot down here? And don't tell me nothing, because I'm so sure you must have written something. I am sure that you must have written something. 100% sure that you guys wrote something. Yeah, like Mary says, explain ethical requirements. Helen says, I can't remember because I wrote the ethical standard. So anybody who wrote the ethical standards, they should have really gotten quite many marks. I don't know why you guys failed. I don't know why you failed. Maybe you never answered the other questions very well. But if you wrote ethical standards, they fall under what we call the general standards. They fall under what we call the general standards. They fall under what we call the general standards. So if you wrote standards governing professional practices, they fall into 3 categories. Number 1, we have the ethical standards. Number 2, we have standards at work. Standards when we were working. And then number 3, we have here reporting standards. Of course, ethical standards don't have to be labeled. These are automatically, of course, we know so much about this ethical what here standard. We know so much about the ethical standards, right? Confidentiality, etc., objectivity, etc., professional behavior. Those are the standards. The standards, ladies and gentlemen, the standards which we should always be looking at in general. They're also called general standards. And then we have standards at work. So when we're given a particular job here to run home with, what should we think about? Number 1, we must think about planning. Very, very important. So the audit strategy, the audit plan. And then number 2, ladies and gentlemen, of course, we must think about thorough supervision. And then we have reporting standards. So basically, standards upon reporting would want all members, all auditors who are in practice to ensure that they know how to write conclusions, the opinions, vis-a-vis the opinions, you must be very good. You must be very good in terms of writing the opinions vis-a-vis the assertions. You are to check the assertions. If it's accuracy, etc., that we have audited the financial statements of RCM Online College, right? And for sure, they portray a true and a fair view. So we must be very good in writing these conclusions like that. So it was a straightforward question. So this was a straightforward question, really, but I'm surprised that you guys wrote the ethical standards and it's like you never got marks there. Now, if you look at the answer here, ladies and gentlemen, if you look at the answer to part 1, proposed standards of professional practice. So we have the general standards. The practitioner must have adequate technical training and a proficiency to perform the attestation what here engagement. So you must have technical training. So in short, they're talking about what here professional competence. The practitioner must have adequate knowledge of the subject matter they're repeating there. Number 3, the practitioner must have reason to believe that the subject matter is capable of evaluation against some criteria that are suitable and available to users. So if it is, for example, auditing of financial statements, the criteria is we're auditing these financial statements against the IFRS, the accounting framework, and also the available international standards on auditing. So there must be a criteria. Maintain independence in a mental attitude in all matters relating to engagement. So basically objectivity, right? Due professional care shall be exercised in the planning and the performance of the engagement and the preparation of the audit and the preparation of the report. So they have brought in the issues of, you can see the answers they're scribbling here, confidentiality, professional behavior, etc. So if, for example, they brought in a different matter for purpose of attestation, perhaps in this case here, they would want to go and borrow some loan from a bank. So for them to borrow a loan from a bank, at times these guys will come and prepare a business plan, and then they'll bring the business plan for your attestation as an auditor. So you need to look at those things really. Number one, do I have the competence? Have I ever done this kind of a job? Ama mimi ni fisi tu, naangalia pesa inakuja kuongezeka. Nikichukua this non-audit engagement, is my fees going to be more than 15%? I hope you remember that interest. The fees from one client should never, in this case here, be more than 15% of your total. The fees received from one client should not constitute more than 15% of the fees that you get from all the clients. In short, we are not required here to over-depend on a client, one client like this. Because if, for example, your total income that you're getting from one client is about 50%, so in the future, you'll say, no, I don't want to lose this client. Because if I lose this client, what will happen to my overhead? So it means that straight away, you'll always be on your knees, trying to beg this guy not to leave. So at the end of the day, then you will not be able to give what here are independent opinions. All right. You will be able to give independent opinions. So it will be very important, ladies and gentlemen, to know that as we get into practice, to become auditors outside there, as we get into practice, to become auditors, those general standards must be where? Here. So am I competent? If they bring, for example, what we call the prospective financial information, do I even know what the prospective financial information is? It's not about just earning professional fees. No, it's about knowledge. If you don't know, you're going to engage in an act that will put the profession into disrepute. That's why they spoke up there of what your professional behavior. Always consider consequences of all your engagements. So that's the first thing you need to know. It doesn't matter, ladies and gentlemen, what will be happening. I don't have to start this work if technically, ladies and gentlemen, in terms of ethics, I'm not good. But should I find that I'm good, then I shall accept the engagement. And when I accept the engagement, the next thing now will be straight out to think about planning. Will be to think about standards at work now. Standards at work. The standards at work. So the standards at work, what do we have here? Standards at work. So the standards at work. So the standards at work, this is what we have, ladies and gentlemen. The standards at work, they are here. The practitioner must adequately plan the work and must properly supervise any assistance. At work, we must obtain sufficient evidence to provide a reasonable basis for the conclusion that is experienced in the report. So you're saying at work, ladies and gentlemen, remember, we don't want to make opinions haphazardly. Here, we are going to rely on evidence. And this evidence, we have to dig through what we call, right? What we call in these cases, and gentlemen, sufficient, appropriate audit evidence, high quality evidence. So standards at work, when we are in the field there, know how to plan, know how to supervise, know how to gather sufficient, appropriate audit evidence. And then now, ladies and gentlemen, number 3, go to number 3. So number 3, the third standards that you're proposing are the standards of now reporting. The standards of reporting, the practitioner must identify the subject matter or assertion being reported on and state the character of the engagement in the report. State the practitioner's conclusion. That is what I'll remember always. State the practitioner's conclusion about the subject matter or the assertions in relation to the criteria against which the subject matter was evaluated in the report. Another one, state all of the practitioner's significant reservations about the engagement, the subject matter, and the assertion related thereto. state in the report that the report is intended, this is very important when you're reporting, is intended solely for the information and the use of the specified parties. For me to be able, ladies and gentlemen, to minimize on my liability just in the case of any other Tom, Dick, and Harry out there who would want to rely on my auditor's report to make investment decisions, and then when they go wrong, they come after my neck. I would want to restrict and tell the whole world that this auditor's report can only be used by the people who contracted me. The people who contracted me were who? The existing shareholders. So listen, ladies and gentlemen, listen here. The things that I'm picking that I'll always remember, on the contents here, on the contents of, standards of reporting, standards on reporting. Number one, I must know how to write any conclusions, stroke opinions, vis-a-vis what here the assertion. So if they gave me prospective financial information to simply assess for accuracy, I have to say that as per the work that was given to me, which is assessing for accuracy, I was able to obtain whatever, and I have not yet found anything that would make me cast any doubt whatsoever regarding the figures given. So it will be very important for me, ladies and gentlemen, here to always think about my conclusions. The other thing, ladies and gentlemen, that I've been able to pick about this reporting is that I have to pin down and mention there that the report can only be relied by particular parties. That is very good for exonerating myself from any liability that may come from out there, from other shareholders, not even shareholders, prospective shareholders and other stakeholders who may use my report to make their own decisions. So when you talk of reporting standards, it will be very important for me, at least, I may forget so many things, that I must be good in terms of doing making conclusions. When it comes to these reporting standards, when I'm reporting, I must be very good in terms of tying up whatever work that I've done to particular parties, like that. Also, ladies and gentlemen, when I'm doing these reports, I must be good at placing reservations. If there is any emphasis of matter, paragraph that is needed, it will be very important for me to put it there, because I don't want issues in in future. I don't want issues in future. So, ladies and gentlemen, I think with that, you can now allow Mwalimu to disappear. We are still trying to build up numbers. Of course, even if they don't come up, we shall still continue to the end. But for today, tuachie kwanza hapo. I want to believe that you've gotten some value, and I'm going to have Francis sharing this particular video with you so that now you can make notes at your own time. Otherwise, thank you very much. Please, good night. Bye-bye. Bye. Great, bye.